Hey, what's up traders, welcome back to Forex Gym. In this video I'm going to talk about what to do after you open the trade. So what are you going to do after you open that trade? How are you going to manage that trade? So before I dive into what to look for and how you're going to manage the trades, I'm going to mention the few things. So the first of all is before you open that trade, you have to know your entries, stop losses and your targets. So this is the three main things you have to know before you even open the trade. So you know you're waiting for that particular entry, the price has to go on that one, and you know once the price gets that entry, once you get the price will get to that entry level, you know already your stop loss and you know your target. So you already pre-identified that levels. So once you got that down and you enter the trade, now we're gonna look for, okay, how are we gonna go about it after we already enter the trade. So the first of all is when the new traders when they open the trade, what the new traders tend to do is they go to that micro manage mode. So they're looking and observing every single pip. So what the price is doing, how it's performing, is something changed within a couple of minutes after opening the trade. Unless you are scalp trading, it's unlikely that something's going to change after you open the trade. So the only exception will be scalp trading, because you're trying to open and close the trades within a couple of minutes and trying to bank that 2 or 3 pip profit. So that's a different thing when you're scalp trading, because you do need to tend to manage your trades much more aggressively. But however, when it comes to day trading and certainly swing trading, there is no need to micromanaging your trades. Generally, what happens when you are afraid of losing the trade. So that's one of the reasons why traders tend to micromanage your trades. Now, you probably did not see this coming, but before I continue, guys, smash that like. It really means a lot to me and it helps my channel immensely. So I do appreciate your support. So smash that like. And if you're new to this channel, hit the subscribe. I upload videos about trading every single day. Also join our live Forex Analysis, which runs Monday to Friday, 8 AM UK time, where you can ask questions as well as request any other currency analysis. So we do have 1.5 hours on each session. So Monday to Friday, 5 days a week. There's going to be a lot more coming in the future. What to do after you put that trade. So after you open the trade, how are we gonna manage that trade? Check if any news can have an impact on your trade. So when you put the trade, you need to check. This generally applies on the swing trades, because the swing trades stays a longer time. So it can apply for the day trades, but we generally should know what the news coming out before we take the trade. So this one generally applies on a swing trade. So you need to monitor like if there is any significant news coming out. So let's say if you take the trade on Monday and there's you're still sitting on that trade, you need to still check every day if there is some kind of news. So if you take the trade on Monday and you're still sitting on this trade up until, let's say, Friday, and if it's in a US dollar trade and there is like a non-farm payroll day on Friday, you need to check and see how it might have an impact or on your trade. So you need to readjust the stop loss or make some changes. So depending on what your trade is doing, so you might need to tweak that trade. So tip number 3, how to manage your trades. And I've seen not many traders talk about this, but I do think it's very important, even if you're intermediate or advanced, and especially for the new traders. This is I find it very helpful. So when you put the trades and you have certain targets, so let's for example's sake, let's say you are targeting 40 pips, and then the trade is going to your favor, so it's going nicely and it went up to that 20 pips in your direction, so it feels it's good. But you need to anticipate where the price might have a pullback. Obviously we can't get it always right, but it's good to have that, to anticipate if there's some kind of a high, in that case some kind of high that the price might react on that and you have a maybe 10 or 15 pips pullback. Then it's good to know in advance, it's good to anticipate that pullback. If you have not anticipated that the potential pullback, then when the price goes to that level and starts pulling back, you might be freaking out. Especially if you're a new trader, you might be like looking at this trade and thinking like, okay, this is starting to go against me. Should I close the trade? Should I move the stop losses? And you're gonna have all that negative thoughts in your head, and you're gonna be sort of panicking and biting your nails. So what to do? So it's good to have that anticipation, and you're gonna be sort of mentally ready for that one. So that's gonna be good, and that will limit acting out on your emotions. So because you would be already expecting that the price might have a pullback, that doesn't mean that the price will have a pullback. It might not, and just go straight to your target, and that pullback might be that the price will continue and start going against you, and maybe you hit your stop loss. And tip number 4 is check if market conditions changing against your favor, if there is any action required. This is particularly difficult to do, especially when it's the trade is on the profit zone. And the reason why it's difficult, because your emotions, you're gonna be emotionally attached to that trade because it's already sitting in a profit, and you want that profit to grow even more and potentially to get to that target you own. So let's say you took a trade and the price went to your favor and you're sitting 100 pip profit. So that's good, but your target is calling to 300 pips. And especially if it's a swing trade, because you can be sitting on that one for quite some time, and there could be that the market conditions are changing, maybe some news affected, or there's some change that means that, okay, the price might be a price giving me the signs that this wants to change and go against me, and this trade, there's a chance that this trade might not work out. But that will be difficult to see when you're emotionally invested into that trade and you're seeing that profits, and you want to sit on that profits and you hold on to that profits. So it's easier to miss out that clues that market is giving you, that the price might turn around and go against you and potentially even hit your stop loss. And the tip number 5 is, can you move your stop to reduce the risk? So what I mean by that, to move your stops to reduce risk, I know that most traders, or most new traders, what they do is when they put the trade and the market moves in their favor, let's say 10-15 pips, they quickly move their stop losses to break even, because they do not want to lose. So I'm not talking about that one. I'm talking about when you're sitting on the trade and the price went to your favor significantly, then you need to look at the trade and see like, okay, can I justify moving my stop loss to a certain level to reduce that risk? It does not have to be on a break even or in a profit zone, but let's say if you have a 50 pips stop loss, then and the market went to your favor, I can't really mention like what is the pip range because every trade is different, then you need to look at it, okay, can I move my stop losses to reduce risk? Maybe move the stop losses to 25 pips, and then you can reduce the risk into half. But you have to always judge objectively, can you justify moving the stop loss? And is it gonna be okay? Can you put that stop loss in a good level? Generally, it has to be below or above the significant level, so you can justify. After that, you can justify moving the stop loss, not because you do not want to lose. So that's different. If you have that thought that, oh, I don't want to move, I'm moving the stop loss because I don't want to lose, then that's most likely a wrong move. So you have to always judge it as of, I can justify moving my stop loss to that certain area because the price already moved into my favor, and that's a good area to put the stop loss. And if the price goes against me and comes down to that level and stops me out, then I'll be wrong on that trade. In that case, that will be a right trade, but not, I want to mention it again, not because you do not want to lose. And the tip number 6 is there potential to add an existing positions to increase a risk reward? So how can we do that? So typically that happens on the swing trades, potentially for the semi-swing, and rarely on the day trades. But let's concentrate on the swing trades because generally have a very higher range on that one. So let's say you took the trade with the 25 pip stop loss. I'm talking about in examples, it doesn't have to be on that one. So you took the trade with a 25 pip stop loss, and the market moved to your direction on 50 pips. So you're sitting on a 50 pip profit and you can justify moving your stop loss to break even. The price now is having a pullback. So the price coming down to the pullback, and you can see that you can add you can take another trade on that one. So that one means that you adding the existing positions, but the risk gonna stay the same. So because your first trade, your original trade, is on a break even, so technically you don't have any risk on that. So if the price goes against you and you hit the stop loss, you're not gonna win anything and you're not gonna lose anything. So once you take another trade, so potentially adding that position, and you have, let's say, 25 pips on it, your risk gonna be the same, your original risk. So on the first trade you took 25 pips, but then you move to the trade to the break even, so that reduced the risk. But when you take and you added the position and you took a 25 pip stop loss, your initial your initial risk is the same as your original position. So you're still having a 25 pip stop loss. So your risk is the same. However, your the reward is going to be much higher once the trade starts going in your favor. The only factor is that if the trade goes against you, you will lose on that 25 pips with the same risk. So you already initiated that risk and you already accepted it, but on the psychological point of view, it won't be as easy, because if you've been sitting on the trade, especially if you've been sitting on the trade for quite some time, you will be more emotionally invested. So it might not be best for the new traders to start adding onto the positions. Thank you guys for watching. I hope you found this video helpful. Please smash that like, it really means a lot to me and it supports my channel immensely. And if you're new to this channel, hit the subscribe. I upload regular content on YouTube. Have a great day, and I will see you guys in my next video.